Hey guys, welcome back to Wealth Creation Ideas. This is Mo, and today we're gonna cover SoFi. In this video, we'll go over 5 key trends that you should absolutely know before investing in the company, and why do I feel the stock is greatly undervalued with a price target of $14 in 1 year. So let's dive right into it. The company has been an absolute growth story, with the customer base increasing quarter over quarter for last many quarters. When it comes to generating revenue, the company operates in 3 separate segments. Lending, where they offer personal, student, and home loans. They have a technology platform and which offers technology product and solutions. And the third and the most important one is the financial services. This is the segment where they have SoFi Money, SoFi Invest, SoFi Credit Card, and so on. And if you look at the growth in the financial services segment, in the recent quarters, it is averaging around 40% customer growth year over year. So in Q1 2023, they had about 7 million customers. Now it is close to 11 million customers. The lending platform is also growing, but not at the same pace. And there are 2 key things to consider there. Number one, the company has been a bit conservative in their lending practices, just keeping in mind the current macroeconomic environment. And the second key thing to consider is that, up till about 3 years ago, for every 3 customers in the financial services, the company used to have one equivalent customer in lending. But over the last 4 years, this number has changed to 6, which means for each 6 financial services customer, the company has one lending customer. And what that tells you is that there is an enormous amount of opportunity for the company to cross sell these products once the customer base matures. And that is where the future growth for this company in the revenue is coming from. The second growth engine for the company is their tremendous growth in the deposits. How does that impact their revenue and valuation? Let's dive into it. The cheapest way for a financial services company to raise money for lending is by deposits. And SoFi is doing an incredible job by increasing the amount of deposits on their balance sheet year over year. In Q2 2023, they had around $11 billion dollars in deposits. Q2 2024, this number increased to $22 billion dollars. They haven't seen the full benefit of deposits yet in their net interest margin, but there are 2 things that are going to happen in near future. Number one, the macro interest rates are coming down, which will reduce the interest on these deposits. Number two, some of these deposits are in promotional periods wherein the company is paying higher than market interest rate on these deposits. And as some of these clients mature, that promotional benefit is going to go away. So with those 2 things happening, that is going to increase the net interest margin for SoFi significantly. In other words, it's going to increase the revenue for the company. So that brings us into our third bullet point, which is increasing net interest margin. Firstly, we already talked about the benefit of deposit funding, which the company can get in near to long term as the interest rate comes down, as the promotional discounts go away. But the second and more important factor is that the company has an immense opportunity to cross sell to its customers. And as company continues to cross sell, it has an opportunity to sell to its customer higher margin products, which is going to directly impact its top line. Moving on to our fourth bullet point, which is the credit losses. This is by far the biggest risk factor for a financial services company. And let's see how SoFi is doing in this area. The company has been doing pretty well when it comes to credit losses. What you see here on the chart is their losses by loan vintage. And I think the simple way to understand this chart is if you look at the gray line over here, What this line really represents is that of all the loans that were originated in 2017, how the losses for those loans have come over the period those loans were held on the books by SoFi. So if you look at on a cumulative basis, they wrote off 7.85% of their loans. And as you look at the more recent vintages for the company, the losses have been trending lower than their original 2017. This has partly to do with they being a little bit more conservative in lending, but at the same time keeping the growth on. And the second factor that impacts this that as the company matures, its credit models mature, right? And they get better and better when it comes to credit underwriting. So all in all, this is a number that is to be looked at and watched very closely if you want to be invested in the stock. But at the same time, the company has been performing fairly well when it comes to credit losses. And that brings us to our last bullet point, which is the macro factors that are broadly impacting the financial services companies. As in the near future, the Fed continues to reduce the interest rates, that is going to open up the credit. And what it means is that there's going to be more demand for personal loans, residential mortgages, or any other kind of financing. That gives SoFi an opportunity to continue to originate higher volumes in the near future. The only thing which we have to keep an eye on very closely, as I mentioned earlier, is that credit losses should remain in check. As long as the broader macro environments don't encourage increase in credit losses and the interest rates and the credit continues to open, that is a very positive sign for the company. And that brings us to the last section of the video, which is what do I think about the stock price? And before we dive into the valuation and expected stock price in next 12 months, I would like you guys to like, comment, and share this video so that we continue to produce more content like this. Now, diving into the share valuation, I've used a tangible book value multiple for the valuation of this company, right? It has about $4 billion of tangible book value at a 3.5 times multiple. And again, 3.5 times, generally you won't see a lot of banks trading with that kind of a higher multiple, but I have given SoFi a higher multiple just because there is an incredible amount of growth opportunity which is available in this company. That gives us a valuation around $14 billion with, give or take $1 billion outstanding shares. The stock price, I'm expecting it to be around $14 in next 12 months. Now keep in mind, as I said earlier, the macroeconomic factor is changing. We have to keep a very close eye on the growth. We have to keep a close eye on the credit losses for the company. And if you subscribe the channel, I'll continue to produce videos if there is any significant events that impact this assessment. I think that's it for this video. Again, like, subscribe so that you get notification as and when I produce new videos or or a follow-up video on the same stock. Thank you. Till the next video. Bye.